Coming into this morning, like I always do, I noticed a deep amount of red on the screen. And that might be due to the Trump tariffs and the little excursion that happened between the U.S. and Colombia yesterday. That might be due to geopolitical events. It might be due to the fact that now fires in LA are becoming floods in LA, as now we're seeing potentials for landslides. But something else happened last night. In fact, it actually happened over the weekend. And we really didn't see the nature of this until yesterday. China, or more importantly, a company in China called DeepSeek, released a model of their AI called DeepSeek R1. And while this sounds like nothing big, here's the big news about DeepSeek. Because everyone's asking, well, either A, why is the markets dropping so hard? And B, if mainstream media is saying it's based on the Trump tariffs, they're not looking deep enough into it. DeepSeek is an AI language model that basically uses a lot less energy and uses older technology. And so this is concerning a lot of people out there. And you got to think about this. If there's a competing model out there, because there's several competing models that compete with ChatGPT, but this is the first one that's come out that uses a significantly larger or a significantly less amount of energy to create answers, to have dialogue with you, to do the things that AI agents do. Here's the other thing, all right? It's costed, let's call it ChatGPT, $6 billion to get to where they are right now. And apparently DeepSeek has done literally the same thing on $6 million. So I want you to think about you as an investor, you and I as investors, and we're looking at AI being the next great thing. Well, if someone can do it on 6 million, what others have taken 6 billion to do, doesn't that tip the scales? Doesn't that make you feel like you overpaid a little bit for your investment in AI? That's what's causing issues in the markets right now. And before I get to the S&P, before I get to the bond market, before I get to oil, gold, Bitcoin, let's talk about the one chart and the one stock that's being affected the most by the news that came out this weekend, and that is Nvidia. All right, Nvidia opened down 12% today. Right now, it's come off of its lows, but this is an interesting one. This 127 area, all right, that is an area of support, which we broke on an intraday chart. So closing below 127 is a very crucial area to me in terms of where Nvidia goes, at least for the short term, because if we close below 127, then I'm eyeballing 110, I'm eyeballing 100. And I mean, let's, make no mistake about it. I'm bullish on Nvidia. Nvidia is probably the number one stock, especially in tech, long term, into what has returned investors, but not today. No, not today. We were coming into Friday with Nvidia potentially hitting 150, and it did a turnaround. And the candle that we saw on Friday should have given us the information coming into the weekend, but it didn't. There was a little bit of reaction to this big DeepSeek release, and of course, smart money got to the sideline on the weekend. But of course, here's what happened. So the DeepSeek app very quickly became the number one downloaded app on Apple. So I want to ask you, how many of you downloaded DeepSeek, right? I downloaded it last night to take a look at it, to get an idea of what it does versus what ChatGPT does, right? Versus what Grok does. And so I got to say, I'm actually kind of impressed that it can do a lot of the same things that ChatGPT does, but on a lot less energy. That's what's spooking the markets this morning, folks. Hey, let's move forward. Let's take a look at what's going on overall with the markets real quick. So this is a chart of the SPY coming into this morning, and you can see the gap down that has occurred. Where all of a sudden 610 Friday we hit an intraday all-time high in the S&P, and all of a sudden now we're down 2%, right? 1.5%, 2% on the open this morning. And while that's a big gap down, we are still well into bullish territory. I would get nervous if we drop down below the January lows, which sit around the low 570s on SPY. So there you go. So one day does not make a turnaround for the markets, but we're going to be paying attention to this candle, not just today, but going forward into the oncoming days for the rest of this week and where we sit at the month of January. Bond market got a little bit of a gap too, but it gapped to the upside, and we're on January highs with the bond market. Now, obviously, a lot of folks went risk off this morning. And risk off means they got out of riskier assets such as stocks and commodities and digital, and they moved their money into the bond market. Maybe that's for a short term, maybe that's to be a longer term move. When you look at the chart, however, the chart shows we're in a downtrend for the bond market. It means that there are a lot of traders that still believe we are going to see higher inflation. And when you look at what the new administration has to deal with, maybe for the short term, they do have to deal with higher inflation that could be coming around the corner. There's two types of inflation, and I don't want to get into this as an entire subject I could get into. There are two types of inflation out there, folks. There is physical inflation. Now, think about what happened in LA, all right? A large, significant amount of homes got burned and got charred to the ground. So that is creating, in some cities, a shortage of housing. Well, guess what's happened? Rents have gone up, and home prices to rebuild are going to be up as well, right? That's going to cause what's called physical inflation in a particular sector, right? Here in the state of Florida. So what we've noticed is, and this may not be everywhere in the state, but in certain pockets, citrus, there has been a problem growing citrus. Right? There has been some decay. There has been some disease in oranges, in the orange area, and in lemons and citrus fruits. And so what happens is we get a supply shock. Supply shock is what I call physical inflation. And then there's monetary inflation. And monetary inflation is where we just constantly debase currency. And I believe that we could continue to see monetary inflation. We've ran monetary inflation before the 70s. Monetary inflation was pegged to the gold. It was about 2%. Right, we'd see a 2% decay in the U.S. dollar. Most recently, in the last 4 years, that's moved up into the high single digits, 7%, 8%. So those are the two types of inflation that we monitor, and they have every reason why. When you see the S&P going up to, on average, 8 to 10% a year. Well, that's because we see a lot of monetary inflation that's coming out of the market. Your U.S. dollar buys less at an average of 8 to 10% a year. I didn't want to get too much into that, but that's my high horse on TLT. Let's get to commodities. Here's one that I didn't expect to move so high so fast, all right? We're starting a move in oil quicker than I expected, right? So coming into the year, a lot of folks thought that oil was going to drop into January. That has not been the case. In fact, January we saw the oil markets up. Started out USO end of December we were just above 75. We went as high as 85. That's about a 10% spike in oil prices. We've taken half of that back, right? And maybe a good bit of that has been because of executive orders that we are going to start drilling. That the U.S. is going to become again a net exporter of oil and energy. However, I don't think that's going to happen overnight. And I do believe that we will see the seasonality of oil stiffen up, at least in the summer, until a lot of these rigs get back online, and then we could see the price of oil start to drop. But oil did spike. We've had about a 50% pullback. This is an interesting area right here, folks, just below 80. Because breaking out of this triangle, we ran up to about 84. We pulled back to 79 and change. That happens to be the high for coming into the last quarter of 2024. That's a significant area of support. We will continue to watch that as we move forward. Here's a big shocker for me. I did not expect to see gold jump up and tag the all-time highs that it did, GLD. But it did that on Friday. We're getting a little pullback today because obviously the dollar stiffened up because of the information we've seen coming out of China. But again, this is an area where we've broken out of this triangle. Next stop, if we break above and close above that 255 area, right? That 255 area for GLD, 275 will be my next area of resistance. And let's round out this particular session talking about Bitcoin, which I believe is still the big buyer here of everything. So, we saw Bitcoin down last night below 100. It actually moved down into the 98, 90s, high 97s, right? High 97s last night, but has come back. It has regained its move above 100,000. And I believe what's going to happen here is that, this is again a reaction to what's coming out of China with the new DeepSeek app, new DeepSeek AI generation. And it reacted like everything else, big drop down. But I think that's going to be one of those never mind issues that Bitcoin is seeing a short-term reaction. I do expect it to move forward. Next area for Bitcoin where we do see a lot of buyers entering the marketplace would be above 110,000. There'll be a lot of shorts that are going to, if this indeed happens, a lot of shorts are going to move to the cover, right? The CYA portion of short-term trading. And if you don't know what CYA means, think about it for a moment, because that's what a lot of short traders will be doing if Bitcoin does get back above 110. So, in summary, here we are at coming to the end of January. January has taken a beating, right? It's taken a beating in not only in overall markets, but in tech stocks. Nvidia dumps hard after what we call the aftershock of DeepSeek. But the trend outlook, when you go out, all right, go out past January, get into November and look at November and use that as a benchmark. November to December, January is a pullback month. That means trend is still bullish. Earnings are neutral because we are seeing some earnings recalculations. And it's not just about what companies are reporting, but it's about where they see things going in Q2, Q3, Q4. Contrarians are bullish because they see this as a pullback buy. Seasonal, still bullish because we've yet to enter into February, which, right now we have January, which is a seasonally bullish model. February is a seasonally bullish model. Then we move into seasonal commodities, which is oil and gold get bullish. But the volatility outlook, because of all of the executive orders that we've seen happen in just 1 week, is causing volatility to be high.